Hello, everyone. Ren, Alexander, Hugo. Hello, Kevin, my training warrior brother. Good morning, Brock. How are you, buddy? Shahab, Didier, Hugo. Everyone doing okay? Who had a good week? Didier, you have a good week? Okay. So, good morning, Arena. So, this was my call of the week. Pulling back here, but really, I got out early on this. EG. Oh, okay, good. Hi, Paul. Got by pullbacks 85.60. All right. And the pound short was pretty good. I still think you have to sell rallies back to 38 now, 38.15. I don't think we're getting back here. And when I look at cable, to me, this looks like there might be some destiny at 135. That's going to be a very important level, 136 in here. It is Thursday. Didn't I say that? I didn't say TGIF, TGIT. Okay, and one thing I want to point out, I'm sure you guys have noticed, S&P's got to the big round number. I think we traded 4,100. Successive new highs for a long time. Yeah, it's Thursday. But while you're looking at this hasn't. Okay, NASDAQ still has not achieved a new high. So I think it will maybe take it out. I think it's another 170 points or so at 13.9. I'm going to be interested to see where the S&P is, when, if, which I think is going to happen, NASDAQ makes a new high. Okay, so we'll see. It's kind of a signal because the S&Ps are actually dragging NASDAQ back to old highs, which, if you remember the rally from the COVID crash low, it was really NASDAQ led it all the way up and dragged the S&P up. So we have the reverse happening, just in case you're not aware of it. The only thing that bothers me, there are so many people looking for a top in the S&Ps. I'm seeing it everywhere. 4140, a lot of counts, a lot of completions up there. It's the only thing that, it's kind of one of the more almost overly publicized potential highs in the market I've seen in a long time. But, you just have to, ignore those things. Price is king. But I'm just saying that's bothering me a little bit. Almost makes me think that they're going to have to be frustrated, maybe more in time than price, but we'll see. It is my contention. Yeah, it is. Ben, how are you, buddy? It is my contention, and the dollar's lower again, actually testing this important area near 92, that the next time the dollar turns up, pretty good, Ben. That I think is going to be the tipping point, the next rally that we get in the dollar. I don't think it's over at 93.5. I still think there's more in it. EG proved to me that cable is a preferred short when you're bullish a dollar over euro. Euro's completely different picture now than cable. I know it came down from yesterday's highs, but so far, really not that convincing. And we'll see. So, I mean, look at the euro compared to cable now. It's a completely different picture changed this week. So, it's not too late to participate in euro pound. I think this has just started. And do your fibs from this throw under, which is what I showed Monday. And then here was a breakout of the wedge. Look at all the buy stops that were taken out here, and they even got these. So, they've gotten most of the buy stops. Down here, there were no sell stops. So here, I'm going to give you a little tip for, how you approach the markets when you're looking at trades. Who does this? Whoever asks themselves, where are the stops? You ever do that? You ever ask yourself when you're getting into a trade, where are the stops? Well, you know what, Arena? I don't always do that, but a lot of people, don't even think about that. Okay, stops are important because it tells you, who could be vulnerable and what could add a little jet fuel to your trade when they're forced to cover and their stops are elected. So now it's a little more neutral. There aren't as many stops above the market. I think we cleaned out, you know, a week, 2 weeks worth of stops in euro pound. So looking to buy it, I'd like a chance back down at say around 85 and a half, the top of the wedge if we get it in the coming days or week. But I think this was an important turn week in, it's not Friday yet, but that's a pretty nice looking weekly candle. You never took out this 82 low. And I think we're going to at least get a correction, some fib retracement from 92 to 85. Why can't we rally back up to look at this moving average 89 or this moving average 88? So if you can buy them at 85 and a half, I like it up there too, DJ. Okay, so buy pullbacks. Yen's getting hammered. That's supportive for gold. When Peter was here, he said he was actually looking for some type of sell up around the 1750 level. And, Blake has been saying that, for gold to prove itself, and look, we have daily moving averages converging with the breakdown here at 1760. So if you want to be short metals, you're wrong on a close over 1760. Not necessarily a trade, but a close over 1760, right? We could spike above it and then close $10 underneath it. Looking at the gold silver ratio, it's still trying to hold this breakout. Maybe it's given it back today. Let's just take a quick look at the XAU. Yeah, 68's a breakout. See this 68, and we're testing it right here. So, my preferred scenario is that we head back up to 75 still, which favors gold and makes silver the preferred short, even though silver's stronger than gold today. So we'll see. I've done nothing in the metals for a while. And lastly, the crude oil, how many times it's failed from 62, 62, 62, almost 62. So what I'm waiting for here, and maybe it happens with the market not being done till it gets to 4140. It's just a guess, but I'd like to see all the 62 bears. I'd like to see all the 62 bears being taken out, their stops elected, and then maybe trade a buck or so above it. And I don't think crude is going to make a new high, even if risk blows towards 41 and a half or so. So there's no doubt this shift took place a few weeks ago where, crude was stronger than the S&Ps for months, okay? And so I don't think crude's going to make a new high. And it's a relative, it's a weak sister now compared to S&Ps. So looking for sells and one more drop at least to the low 50s. And we're getting a alert on Aussie yen. The Russell, yes, the Russell, that's something else. The Russell has already peaked. I don't have it up there. IWM, that's that's a good observation, Amira. Yeah, it looks bald or baffed.
Yeah, I mean, it looks like a head and shoulder pattern.
The Russell, let's see it, Blake.
Yeah, it does. And good morning.
Good morning, buddy.
Yeah,
how are you?
You look at equities out there, and they just continue to rally. I mean,
have you heard a lot of people talking about, I've never heard more people talking about a top. Even the bulls are talking about a top up here. Does that bother you at all, Blake? That
Well, no. Well, yes and no. I mean, so here's
oh, nice. Yeah,
here's that head and shoulder pattern for the IWM.
yeah,
Now, you know,
yeah.
futures are going to be up a little bit this morning, but we'll see where it trades to. I mean, you know, we're once again at the megaphone pattern
Yeah.
resistance, and every time we come up to the megaphone pattern resistance, you know, there's a lot of ruckus. But one of the reasons why I think the 161% extension is attracting so much, you know, or the 4100 levels attracting so much attention is because of the
Options.
161%
Okay.
extension that you see here. I mean,
Yeah.
that's a big one. Now, I mean, the S&P though, I mean, is and you can see here's you know, multiple 161% extensions come up at you know, these prices.
Yeah.
So, you know, I wouldn't be surprised if we stall up here. I mean, I'm selling some S&Ps up here. I already have.
Yeah. Yeah.
You know, but that doesn't. I mean, the risk versus reward to be short for me makes sense, but I'm very small, and it's, you know, worth taking a shot at. And you know me, I'm more concerned with the divergence in the FX risk pairs than anything. And some pretty big developments happen today overnight in
Russia?
currencies. I want to show you one in particular. So one's happening right now.
Okay.
This is the dollar yen. Okay. Now take a look at this. This is let me reset that. Okay. This is trend line from back in 2015 to basically today.
And it's pulling back to it.
It's pulling back to it. This 109.30 was the breakout point. We just slipped below it. And I'm a little concerned that the yen might turn here, especially after squeezing out everybody. You know, there was a time that the dollar yen that did the exact same thing and reversed. Do you remember when that was?
In April, a year ago?
Yeah.
Yeah. Okay.
Right there.
Also, yields have been coming in. That's part of it too.
Yes, of course. Of course. Yields have been coming in a little bit too. But again, you know, we're in a situation where, you know, everybody squeezed out of the yen, or, you know, anybody who was short yen, or I'm sorry, anybody who was long yen got squeezed out. Short the yen pairs, they got squeezed out. And now we're starting to see the yen strengthen again. And it's not just the dollar yen, right? It's the other yen pairs. And one in particular is the euro yen. So the euro yen's got this, you know, nice double top that's setting up. We couldn't break above the 130.60 level. This is a I think this is a multi-decade, or I want to say 12-year trend line. 2008, 13-year trend line. Yeah. So the 13-year trend line, once again, rejecting it, suggesting maybe a double top. I mean, you know, again, I'm going to go with the risk reward here. To short here at current levels at 129.70 to, let's just say 130. So let's say, you know, it's early morning. You guys can guess what happens in North American trade. All the US traders come in and Canadian traders come in, they start buying everything because they do it every day. So, you know, in turn, you see the euro yen pop up to 130, you short it, right? You're risking, like, let's just do the math here. You're short 130. Okay, stop loss at 130, let's just say 80. And let's say your target is back down here at the breakout point at 127. So that's almost a 3.75 to 1 risk reward ratio. Let's say you have 100K on. Okay. So you're risking $600 to make 2,300. I mean, that's a good risk reward. I don't care how you slice it, right?
Yeah. I love that. I really like that.
Yeah, I mean, and that's what we're dealing with here with the euro yen on a pop higher. It's like when you look at risk FX, okay, and you look at what's happened in risk currencies, and by the way, we have one of our traders who's he's in our chat room here. First of all, I'm gonna say welcome back, Martin. So Martin right here, and I'm not gonna but I'm not gonna tell you what's going on with him personally, because he's in our chat room and it's personal. But we are catching him up with and it's nice to have you back, Martin, by the way. He's in South America, and he's been with us for a long time, and we continue, and we know he's going to be with us for a lot longer time, right, Martin?
Amen.
Anyway, and we were just kind of catching him up, and I'm like, yeah, stocks have been going higher, and he goes, yeah, I noticed that December, since like December, the Aussie and the Kiwi has been drifting away from the markets. I'm like, yeah, it's a huge divergence between risk currencies and what's happening in the equity markets, and that's why you're seeing that same divergence in these yen pairs, and risk, right? And that's starting like the last couple of days. You got not only the euro yen, but you also have let's take a look at the Canadian yen. This is their chart of the day yesterday. If you even if you're not a ForexAnalytix customer yet, right? You go over to our blog and you just read the chart of the day yesterday, false breakout last week, testing trend line, 618 retracement. We're breaking it now. So look, you got this, and Dale, and I want to bring in Stelios and Steve and get some comments here. You've got risk FX that's divergent. You've got crude that can't break 62, as Dale, as you pointed out a little bit earlier. You got now these yen pairs showing like they're a little toppy. Everything in currencies suggests that the equity markets should stall up here. That it doesn't mean they're going to. Because nothing. I mean, this is the Teflon market. Nothing sticks to it. But currencies suggest that that stocks are near the end of this rally. So I hear the arguments. I see the levels, Dale, that you've pointed out, or that everybody keeps pointing out. I see them too. And with what's happening in currencies, I'm already positioned that way in currencies, and my trades are working fine. So, taking a little bit of risk in equities, I don't mind doing it, just because it's what's working in currencies. What I'll tell you, what's not working in currencies is you continue to see stocks hit all-time highs, and then you go out and buy Aussies. Go try doing that, and go see how well you're doing. Right?
Okay.
I mean, look, if you're gonna trade FX and you're gonna say, well, stocks are going up, so I'm gonna buy Aussie dollars. How you been doing with that? How's that working out for you? Probably not so good, right? Considering I'm making money just selling rallies. So, so I'm just pointing that out, that it's not as cut and dry in currencies, but what it is telling us in currencies is that something's brewing in equities, and you got to be aware of it. So that's just a little heads up. So Stelios, Steve, good morning, guys. How are you?
Good morning.
Good morning, mate.
Hello, everybody.
What's happening?
Good.
All right.
How have you been?
Equities are going up. That's what's happening. No, I'm kidding.
I know they go up every day, but as you know, you probably just heard, you know, the conversation been having with Dale. You know,
Yeah.
some of these yen pairs are showing some weakness, and you know, obviously that has a little bit to do with yields. And you got yields. They broke a couple of days ago. We haven't broken down, and the 10 years more the, you know, this is the chart that we're all watching. But you know, as we've been saying in ForexAnalytix and in the analysis in ForexAnalytix, is that that the 10-year looks to be turning higher. And you know, we've gone from a bearish bias, and we're looking for a move back up to 133, you know, here in the near term. So that means yields are probably going to come down. So if yields come down, you know, how are equities going to respond to that? But anyway, so Steve, Stelios, what are you guys' well, let's start off with Stelios. What's your thoughts here, Stel? You were chiming in.
Yeah, I think what you're saying is right. You know, equities seem very strong, but there's so many signs saying that you know, something's got to give. Either some commodity currencies have to start rising, or risk assets, including equities, have to start dropping. You know, there's one of the two has to happen. The problem we have is that well, the problem for people who think there's going to be a correction in equities is that the Fed is still dovish. And yesterday with the minutes, they were still dovish, and you know, they're going to try everything they can, and they've been quite vocal about yields as well. You know, slowly starting to get vocal about yields as well, and you know that they're going to step up their purchases and everything. The question is, when do they fail? Because eventually they're going to fail. Question is, when do they fail? They could go on for another 5 years, you know, like that. So that's the problem with timing equities, and that's why I don't have a position in equities. And you know, friends of mine ask me, "What do you think about equities?" I say I don't buy them, but I don't sell them either. If I want to take a risk-off position, I'll do it in some other way, just like you said, Blake, with the commodity currencies. So
yeah, and that's how I've been playing it. But you know, at some point, you know, yeah. Well, for me, it's like, okay, I got to take a stand and stand in front of the train. So
yeah.
I don't necessarily know if that's the smartest thing to do, but you know, every once in a while you gotta
our friend Samsi wrote, just better to just keep riding the trend in equities until it changes. Yes, that's a fair point. If you've been long from, you know, the lows or close to the lows, obviously it's very easy to stay long and maybe trim some as you're going along. And actually saying that, my brother, who's been in banking for like 25 years, he works at Deutsche in London, and he told me today that you know, you can trade your pension basically in the UK. And he says, after being long for the last 15 years, I am now scaling out. And he's taken off over 50% of his position, which you can guess has done pretty well over the last decade and a half. Yeah.
That is crazy. What a ride. And especially to stick around this whole time too, through everything. So Steve, we got a few minutes. What are your thoughts? Have they changed at all? Are you dropping everything going long Bitcoin today? I mean, what's happening with you?
Oh yeah, absolutely. Just I'm going to like fringe cryptocurrencies, cat coins, and you know.
Well, you know, speaking of crypto, you know, we've seen Ethereum's trying to turn a little bit, and Bitcoin's getting really close to support.
Indeed.
And you know, I'm really skeptical that Bitcoin, even if it starts to break lower, even if we, you know, break lower, I'm really skeptical that it's going to fall too hard. I think there's so much investment in it right now and so much big money in it. It's just not.
I think it's going to fall hard at some point, because these, let's call them assets, very rarely make subtle moves. You know what I mean?
Yeah.
So I think at some point it's going to have like a very sharp drop, and probably we're closer to that than to another leg higher. And if we do get another leg higher, I expect it to be, you know, incrementally above the previous high. We were discussing yesterday. Yes. Before we see you know, a much larger correction lower, and then we can resume the upside. But I don't think there is any, you know, I don't think there is any fuel left to go higher before we can actually, you know, Correct. That's what I
Yeah.
think about it. Having said that, I obviously, have no intention of trading them. Neither short or long. It's more of a casino trade if you ask me, and this is not the kind of trading I want to be involved in. But yeah, I do keep monitoring them on a daily basis. Now, clearly, if we, if and when we see some risk off in the markets, my thesis hasn't changed since a long time ago. Meaning, I consider it obvious that they're the riskiest of risk assets. Meaning, when we see risk of conditions, I believe they're going to be the first ones to suffer.
Well, yeah, and that's going to be interesting. I think so too. I think the attitude towards, crypto is going to be, as I've mentioned, a lot, is that they are viewed as the more riskier assets out there. And so if there is some risk off, we're probably going to see it there first. Hey, Huawei asks, what's Salma? Salma is our chat room nickname for the dollar Mexican peso. She's named after,
Salma Hayek. Yeah.
Salma Hayek. So when we
From
say
dusk
we're buying
till dawn,
Salma, we're buying the dollar Mex, and if we're selling Salma, we're selling the dollar Mex. So, and then we sometimes we can get her to dance with us when we get long. So it's nice.
You wish.
Yeah. So that's just kind of some of our chat
fantasies.
Chat room fantasies. Fantasies for most of us in the chat room. Hey, we've seen this rally back in the euro dollar, and I want to point out, since I know you're focused on the dollar quite a bit, and what's happening on the euro. Yesterday, we had the euro actually reject the 38% retracement, and also put in a gravestone doji. You can see it right here. This is a daily chart, and also we closed below the 200-day moving average after the push above the 200-day moving average intraday. So what I'm trying to point out here is that while we're below this 38% retracement, let me get rid of this really quick. Just makes it easier for us all to see. While we're below the 38% retracement, given the fact that we moved above the 200-day moving average, anybody that had their stops above the 200-day moving average got whacked yesterday. The 38% retracement tested, reversed. We held 119.09 basically. While we're below that, I think it's a little risky to be long the euro at this point. I think if we get a daily close above 119.10, which would be the 38% retracement and the highs from yesterday, then that's like a signal that the euro is going higher near term. Do you have any thoughts here, Steve?
Depends on your time horizon. I agree with everything you said. I do need to add, though, that if you look at the move lower in the euro, it doesn't have impulsive characteristics. I mean, that much is clear, right? I mean, just look at the price action since we topped. I mean, does this move lower look to you like, a big turn and a big bearish move to the downside?
You mean what? You mean over the last couple of weeks?
Yeah.
Oh no, this is definitely just this seems more just retracing, and that that's where it comes to my my longer term.
Bottom line, exactly what I wanted to say is that if I want to be aligned with the trend, although yes, there is the potential for more downside in euro, why trying to speculate on how much lower it can go and trade it short when in all actuality, if I wanted to have a position there, it would be being long. I just don't know when. You know what I mean? I don't have the trigger yet. But if I had to choose a direction for my trading style and my trading horizon, it would be to the long side. But not yet, because as you said, in the short term, yeah, there is the potential for more downside.
Yeah, and that's why and actually we were just talking with Stelios in the chat room, and you guys know my view is I'm looking for a move to below 116. I want everybody stopped out below this level right here, right below this level right there.
Yep,
and
exactly.
I want to see everybody get stopped out, and I want to be on the flip side of that, getting long. So
if somebody necessarily wants to be short the euro, though, I can tell you one thing. If you pull up the euro yen, in my
Yeah.
opinion, technically speaking, there is a much more interesting. I'll tell you so you can draw it to show it on the chart. But let's wait for 10 seconds. We have jobless claims coming out any second. Let's see what we get. Extend that trend line that you were just fixing, Blake. Okay, not yet. Let's first see the data and I'll tell you. It's a little bit delayed.
744. So yeah, it's a bit worse than expected.
Oh, so jobless claims are pushing up a
Right.
little bit. 744,000.
744, yes. Okay, let's go back to the chart and we can finish with that. So extend the trend line, that black trend line you were working on, extend it to the previous low. No, from the other side, extend it. Yeah. Perfect. Okay, and now, why don't you draw a trend line resistance for a big wedge? Yes. And extend it backwards as well. Yes.
Wow, nice.
So, you know, if somebody necessarily wants to be short the euro, I'm keeping a close eye to this possible formation.
Yeah, that makes a lot of sense.
We have our guests here, but when you think about it, gentlemen, yen rallied about what, 900 pips, 102 to almost 111. Why can't it pull back to 106.5 and still be okay? So, you know, that leaves some downside for yen crosses.
Sure. All right. Well,
Anyway.
hey, I want to thank everybody for joining in. Steve, Stelios, always appreciate your ideas, and you too, Dale, especially, you know, right at the beginning, kicking us off. Hope you have a great interview today, and for the rest of you guys and gals, make sure you visit our webinar sponsor, which is Pepperstone Securities. You can go to our ForexAnalytix sponsored page. Visit Pepperstone. We are partners with them, especially if you live outside the US or Canada. Make sure you open an account with them using this link right here, because you can get ForexAnalytix for free for several months. All right, I'm gonna pass it over to you, Dale, and have a great interview, guys.
Thank you, guys. Enjoy the interview.
Yeah, we'll see the rest of you guys on the Morning Edge in 45 minutes. So,
okay, thank you, Blake. Good luck today. Good hunting. You can see Blake on the Morning Edge in about 45 minutes, updating his bias chart. So, Tim, first-time guest on Face. Welcome to our community. Waiting.
Hi, Dale.
Hey, Tim, how are you? Nice to meet you.
Yeah, good. Nice to be here, mate. Nice to be here.
Okay, so I could tell you're not from the U.S.
No, definitely not.
Okay, so
definitely UK.
All right, Tim. So have you been in Zoom before? You want to share your screen?
Yeah, let's do that now. Hang on.
That's that little green box down there, Tim. Macrodisia.
Yeah, macrodisiac. That's
macrodisiac. Okay, why that handle? Macro kind of puts you in a state of nirvana.
Yeah, yeah. It's sort of it's a guy who I sort of met online a couple of years ago. A guy called David Bell. He actually started macrodisiac, and I joined as a member. It was his idea to sort of to try and help people understand sort of the macro side of trading, which I think a lot of people, a lot of retail traders especially, they try and ignore.
So you know, you're starting off here with the daily. Macro to me means weekly, monthly looks at things as well. So you teach people to use a telescope rather than just looking at the markets through a microscope.
Absolutely, absolutely, and not just from a technical perspective as well. You know, it's you can often pick up information, you know, on a much lower time frame of what the market's looking at, you know, in terms of how they react to a certain data point, or just ignore a certain data point completely. You know, particularly if you think about inflation at the moment, you know, everyone's getting very worked up about inflation, but there's not really much sign of it just yet.
Let me ask you this before we get to the markets. Can you tell us a little bit about your journey and how you got involved in the markets? You know, did you have mentors, or were there any books that were very influential, or are you pretty much self-taught?
I think for me it's a mix of all of that. My sort of journey, if you like, in trading, or even a bit further back, I moved to Spain. Actually, I'm in Spain now, from the UK, nearly 19 years ago. I started working as an estate agent, started working in property here, helping people find homes over here and everything. But over time, it lost its appeal, there wasn't much of a challenge, and a guy that worked in the office next door mentioned the markets to me, as often happens, and everyone says, it's a nice easy way to make a bit of money on the side. I think we've all heard that.
Nice easy way.
That's it. Yeah, that's the one.
Yeah, it's a piece of cake. All you have to do is okay. Yeah,
you
could work and you could work.
Yeah.
I remember people saying, well, you could work and just spend 15 minutes when you come home from work and open your platform and just make a few $100 and then go have dinner.
Yeah, that's exactly that.
Very realistic. Very realistic.
The dream we're all sold.
Yeah.
So obviously I started out like that, and really this was back in 2016. So it was quite the year as well to start paying attention to the markets. When I saw the Brexit vote, and I saw some people talking about how much money they'd made and how they called the vote, and going into deeper analysis of it and everything, and that really grabbed my attention. There was twice that year that I was extremely wrong about Brexit and about Trump being bad for the markets. And that really was what drove my interest from there onwards, and to look at things from a wider perspective as well, rather than just looking at technicals and everything, because there are ways to get ahead of the market, or at least attempt to get ahead of the market and assess the risk more more carefully, if you like, in advance of perhaps the move happening, and maybe take a position before the technicals are screaming, do this. You've got the wider view that you can look at and consider. Okay, has this, are we ready now? Is it worth taking a small position and then trying to scale into this?
So you have a narrative, and that narrative gives you a bias, and then you wait for something technical, chart-wise, to confirm those ideas, or at least to probe it.
Exactly. Yeah, you try and take the position ahead of the price. The price confirming. It takes a bit of. You've got to it's a bit ballsy sometimes, and obviously it doesn't work quite often. So you have to start small.
Okay.
So I mean, there was. Let's think about the narratives of the last year that we've looked at, for example, and it's important often as well to look at when the data doesn't match up to the narrative, the same as when the price doesn't match up to the narrative as well. That's where some of the best opportunities come, is where everyone's talking about perhaps the top in the S&P might be a really good example of that you touched on earlier. Everyone's talking about there being a top in the S&P, but you look at what we've still got. Nasdaq's had a good pullback. Obviously, the big tech in there are heavily weighted for the S&P. So I still think we grind a bit more, to be honest. I think those, as they've often been, I think those calls for a top are going to be a bit premature. Okay. But I do think we're due a correction at some point. I just don't think it's yet. I think we've got some positive earnings surprises and things to go ahead and get through all of that, the positive data first.
Okay, so you talked about people getting a little all bulled up about inflation, commodity super cycles, that you really haven't seen it yet. And now we're looking at gold charts. So really has been, I don't know, correcting a long-term uptrend, but a little shorter term. Do you need closes back over 1764 to confirm it? Because to me, it still looks like it could go either way. And actually, my preferred count is for us to take out that double bottom and wash out one more time. What do you think?
I'm with you there. I'm exactly the same.
But we also know where we're wrong, right? If we start closing back over that breakdown. You probably want to get out of the way.
Absolutely. Now, I think this is again where something that I didn't pay much attention to at all at the beginning is obviously yields, and especially the real yields, inflation adjusted yields, which when you're looking at gold, is so important. And you've seen, I actually had another chart here. How do I move this down?
Just switch charts. If it's on the same screen, it'll change.
No, it's in a tab underneath actually. If I can just bring this down a bit, Okay, so I had it over here. Yeah, there we go. All right, just give that a chance to catch up.
Okay, yield. Got it.
Yeah.
Got your yield chart up there.
That's it. So obviously we've seen that they've, ever since we bottomed out down here, okay, back in August. Okay, so I think what I've done here, sorry, just to explain, I've inverted the gold side of things. Okay, so obviously as the US 10-year yield has increased, gold has been going down in value ever since this sort of August. But recently we've seen that divergence again, you know, and this, you know, let's talk about the jaws, you know, which way are we going to close into this? You know, is it going to be a case that the yields are going to continue lower, or is gold going to continue lower? You know, which way are we going to go? And I still think that we've got a little bit further to go in yields after a bit of a pullback now. I think a bit of consolidation is probably in order for the time being. But I still think we're going to get, even though everyone's expecting the inflation and talking about it being transit. Well, I don't know if everyone is, but I think there's perhaps a bit more of a consensus on that side that, you know, certainly the Fed think it's going to be transitory, and I would tend to agree with them.
Okay. So with your outlook on gold, does the dollar play a factor in it? We've been pulling back in the dollar from last week's high. Does that mean that the dollar may reassert itself? Cable had a pretty lousy week. You know, it topped a few weeks ago, and Euro Pound had a good week. So do you think that we could see another push up in the dollar that might be the catalyst for another decline in metals?
I do, yeah, I do, and I think perhaps perhaps we'll see that in the yields as well. You know, the dollar and yields have been quite correlated of late. So yeah, I'm still bullish the dollar. I think obviously we've had a decent move. We've now pulled back a bit, but you know, just resetting really. I think before another move higher in the dollar. Okay. I'm not keen on selling dollars at the moment at all.
Okay. Any other instruments that you wanted to talk about with us today, Tim?
Yeah, I mean, if you look at the euro here as well, you know, I think Blake actually touched on this just in the preview as well. You know, the level that we've moved back into there is obviously, again, looking at the daily chart and the 200-day moving average here as well. You know, that again, it's a nice, easy sort of flip point that we can see, you know, where the risk reward is possibly favoring that. Now with the euro, I'm on the fence at the moment. I'm not a fan of the euro. I think, you know, the way the European Union have handled the pandemic has been pretty terrible in terms of the vaccination rollout, the delays in the recovery fund. You know, and I think that potentially, you know, we see the euro and the eurozone suffer for longer economically because of it, perhaps more so than people are expecting at the moment. But obviously, it's a relative game. It's a relative game.
Are you hearing any kind of narratives about, you know, there's this guy I've interviewed quite a few times who talked about that there could be some type of crisis coming out of Italy, and he actually last year said April was a time frame. Are you hearing any rumblings about new issues with Italy and the European Union?
I wouldn't say new issues. But my model, if you like, for how the EU and the eurozone work is that they are constantly in crisis of varying degrees. You know, there's not, unless we see a real fiscal union and we see it actually become a genuine union rather than a kind of a dysfunctional one, then I just can't see how we ever get out of that, if you like. You know, there's the German court case that's going on at the moment as well, which, you know, it's probably not going to go anywhere, but it's just another delay. It's just another seed of discontent within the eurozone, and sort of there's been a lot of talk about a two-tier version of the eurozone as well, but it's just nothing's ever resolved with the euro, you know, with the eurozone and therefore the euro. It just doesn't.
So are you a sub-parity guy?
I mean, who knows? It's always a relative game, Dale, as you know.
Yeah,
you've got to take it as it comes and see how things compare to the other assets, because obviously there's all sorts that can happen with the dollar in the meantime as well. You know, the Fed have made clear what they're planning to do for the time being, you know, but obviously markets can go one way or another. The Fed have got to act, and that can have another sort of domino effect as well. So whilst I try and build a picture further out with the macro side of things, I think it's important not to get too married to that longer term view. It's kind of a constantly updating forecast that you're trying to build, or at least that's how I see it. And then you're waiting for things to come into play and how they're going to interact with each other, and especially what the second order consequences are going to be, because I think most of the time the immediate consequences are obvious to anyone that's involved in the markets. But you need to try and be looking at, okay, well, what are the things that other people aren't seeing yet that I can try and get ahead of, and and wait for that to and wait and see if that confirms. Because obviously the best opportunities are when everyone's caught the wrong way.
Yes, always. That's why breakout failures are some of the best trades, and predominantly head and shoulders do that. So any feel on commodity currencies as well in here, Tim? Canada, Aussie, Canada, a little bit of a correlation to the energy complex. What else have you brought for us?
Yeah, I mean, I've been bullish commodities since last year, really, when sort of that June last year, really noticed that there was going to be a big push on it, and I think a lot depends on the infrastructure bill now in the US. I think that's going to be a driving factor. China perhaps are not going to lead the way like they did. Obviously China have been massive commodity buyers all throughout this year in particular, but they're sort of trying to slow that credit impulse down now, and sort of rein in their spending a bit. So it makes a lot of sense to me, but at the same time, there's a lot of things that aren't confirming it at the moment. We've already seen a lot. I mean, if you take copper for example, it rallied from 2.5, and we're now over 4, and you think, well, okay, yes, there should be continual demand for copper, but how much of this current pricing is also down to the supply chain
issues,
disruption? Yeah, that's put a massive.
It takes a long time to get a copper mine online.
Yeah,
I think like 10 years or something, right, Tom?
Yeah, I think it is about that, and a lot of the machinery that has to be brought in for it as well. There's delays, and I don't see any reason why commodities shouldn't, shouldn't push higher over the long term. I don't see any reason why, from the current pricing and everything else, we're gonna need more stuff, especially in copper, for all of this electric future that we're aiming for. But yeah, I don't see it as a runaway thing.
Okay, I've had a few guys on that've been real right about uranium. That's another way for us to, I mean, they could blow up and irradiate the world, but it is clean energy if you take out the potential for an accident. So uranium, some of the people I've talked to say it's in its infancy for a bull run.
Yeah, I don't know about the infancy. I think the infancy we saw a couple of years ago. We actually in Macronesia talked about this as Cameco being the best play, really, because the sort of uranium ETFs weren't really they didn't really have any liquidity or any volume in them, and obviously that's
a lot of them do.
So Cameco's done pretty well. But I think now again we need to, the governments really need to get behind nuclear more than they currently are to sort of push us on for the next level. It's starting, and I think it's inevitable. I don't see how else they're going to create the levels of energy that we need. It's sort of clean energy that we need, and replace fossil fuels, especially in the timeframes they're talking about, unless they're going to include nuclear in that as a much larger share than it currently is.
Okay, this is a little bit off topic on individual instruments, but you appear to be a thinker, and putting together the whole jigsaw puzzle. A lot of new presidents early on in their term, Tim, are tested by adversarial forces.
Mm-hmm.
And there's quite a few things bubbling on the stove right now. Russia and China, especially Russia, because President Biden's telegraphed that there's going to be retaliation for some of the misdeeds of Russia.
Mm-hmm.
And I'm wondering if you think that there's some geo risk out there, that we're so used to all of these things never turning into anything, that it just seems like bluster. But I'm a little concerned about some type of test of Biden by possibly Russia, called Putin a killer. Sticks and stones will break my bones, but names will never hurt me. Well, it bothered Putin. And, you know, and all the hacking and the election. Do you think that there's a possibility? I saw pictures of tanks rolling into Ukraine, like major amount of buildup of the army in Ukraine. Do you think that Putin is going to test President Biden here in the next couple months? What's a European viewpoint of what's happening with a new administration here and the geo scene?
Yeah, I think it's definitely a spot on with the testing. I think that's already happening. I think they're already trying to establish maybe new boundaries, should we say, for engagement and so on. But I still, yeah, like I've been thinking about it with Russia and with China. And I mean, no one did anything when Russia went into Crimea, did they? There was no real consequence to that. You know, in terms of in terms of markets, you know, in terms of a real risk-off sentiment. Oh my God, this has happened. You know, it's changed everything. And again with China, I think the costs of a real conflict are perhaps too high for everyone involved.
Yes.
And especially coming out of where we are now, you know. And I think it's something that's just going to continually rumble along in the background, probably for a while longer. At some point there might be a flashpoint, you know, but I think perhaps we're just going to see more of this economic, you know, the Cold War decoupling that we're seeing now.
Yeah.
You know, Russia's relations with the US haven't been good for obviously quite a long time. You know, they keep interfering with the Nord Stream as well, Nord Stream 2, which Russia aren't overly happy about. But in the end, everyone's interests sort of they seem to just about get aligned enough that there's the major conflict is always avoided.
Okay. Any other markets you want to discuss with the community today, Tim?
Yeah, I mean, Euro pound. We've obviously we saw the potential for the vaccine trade earlier in the year, the sort of the relative vaccine trade.
Yeah.
Obviously we've seen Euro pound has just gone right down from this 90 level up here. But yeah,
this week we got a weekly reversal to the upside. I think maybe we could rally back to the breakdown. Looks like on your chart about 88.5.
I don't know.
Tough call.
I don't know. Yeah, it's a tough call. I don't know if we'll get that far. Like I say, I've still got a fairly bearish bias on the euro, and I'm pretty bullish the pound overall as well. I think the UK has been battered down a lot with Brexit, and you know, the recent move in the pound, I think, has probably been a bit more positioning and it's sort of just a bit of a washout than anything fundamentally changing. I still think the UK is far better positioned to weather the economic side of this far better than the Eurozone. I think the economy actually coming out the other side of this will be a lot better. And I like the super deduction as well that the Chancellor put in from the UK, encouraging investment. So it's basically a 130% deduction if you make investments in assets, basically for your business in the UK, then you can get a massive deduction on your taxes, which will incentivize investment. You know, it will incentivize investments in energy as well, particularly over there. So I see that as a alongside the general sort of economic climate there as quite a positive driver for the UK. Going forward, and I still think there's people that believe that Brexit's going to be a disaster for the UK, and I still don't think that it's going to be anything like as bad as it hasn't been continually so far. You know, but people seem to hang on to that narrative that it's bad.
Yeah, I mean, according to EG, it's become the safe haven currency in Europe.
Yeah, I guess so. Huh? I guess so. Yeah, I like that.
Yeah.
Like that. Anyway, they were talking about it being an emerging market currency about a year ago, weren't they?
Yeah, and now it's become the flight to quality out of Europe to the UK.
Exactly.
Okay. How do you like living in Spain?
Oh, it's great. Yeah, it's great. I love it. Love it over here. Yeah.
You never want to go back to the UK?
No, I mean, it's still not really. There's nothing that would really take me there. I've got my family here. My kids were born here. They're growing up here. They go to Spanish school.
All right.
You know, so yeah, my life is here. Is here now, Dale. I've literally lived half my life here now. So,
Are you near the ocean?
Yeah, just 10 minutes back from the Med.
Oh,
down in
wow.
down in the south of Spain. So
Is the cost of living still less in the UK and the US, or has that changed?
No, it's still much lower, and where I am as well, property's relatively cheap as well. You know, you could still buy a villa by the coast here for sort of 400,000 euros, something like that. Which obviously a lot of places, you've got to go a lot bigger.
I'm in San Diego; it'd be 10 times as much.
Yeah.
Well,
yeah.
You know what happens when you survive an interview with Dale Pinkert on Face? Are you ready?
Go on, tell me.
It's a life-changing event. You're crossing the Rubicon.
Okay, I'm ready.
All right, can you take it now? I
on.
bet our attendees know what I'm going to say. You are now my trading warrior brother, Tim.
Likewise, Dale, likewise.
You know, it's like the mafia. Once you become my trading warrior brother,
well, I'm a made man.
You are. You're a made man. I'm so glad that you got back in touch with me, and we got to talk to each other. And I want to wish you all the best in your efforts in the market, and really appreciate you giving us some time, because that's our most valuable currency, for you to come in here and share a little bit about your journey and some of your views on the market. So much appreciated, Tim. And
Thanks,
what's the best way for people that you could get whacked now, Sansi saying. So I've been watching The Godfather on TV. Anyway, so what's the best way besides your Twitter handle for people to find you and follow your work?
They can email me at tim@macrodz.com, or just come in here to macrodz.com. We're always publishing things here.
Yeah, I saw that.
Yeah, we try and keep it light, have a bit of fun with it as well, rather than the real formal stuff that people tend to find in financial writing, especially. But obviously it is more than just looking at the technicals and looking at the charts. We're really trying to dig down into what's going on under the surface in a way that your everyday person understands.
It says you have 5,000 people reading this.
Yeah, we do.
Okay.
Yeah, it's good, and we want to build that to more as well.
Okay, so there you go, everyone. How you can follow Tim? You said you have partners, so there's probably a couple of you're not doing all the writing, are you?
No, not at all. David Bell as well.
Okay, I've seen David on Twitter quite a bit over the years. Say hello to him for us, and this is
I will do.
Tell David that here's your commercial. And thank you so much, Tim. It was a pleasure meeting you, and let's do this again down the road. Why don't you think about this? Maybe you and David could come on together, and we could see a team approach on the next interview. What do you think?
I like that. I'll have a chat with him. Yeah, definitely.
Okay. All right. So thanks again, Tim. Remember, don't just count your euros, your cable, count your blessings, and we'll see everyone to wrap up the week on Friday. I have Fox Business News contributor Charlie Gasparino and reporter for the New York Post. We're going to bat it around a little bit tomorrow. Good hunting the rest of the day, and in 15 minutes, go join Blake and the team for the Morning Edge. Thanks again, Tim. Appreciate it.
Thanks, Dale. It's been a pleasure.
Okay, everyone, adios. Good hunting the rest of the day. You're welcome, Monica, Alexander, and people are saying thank you to you, Tim.
Thanks, guys. Thank you.
All right, that's a wrap. I'll see everyone tomorrow to end the week.